everyone. Welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, we wanted to share with you some notable token price movements and what we think drove them. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Okay, guys, it's been a very busy week. Obviously, we just had the FOMC meeting a few hours ago with the 75 rate hike, 75 basis point rate hike. I know a lot of people were expecting that. There's earnings season, which has really caused a ton of volatility in the market. And on top of that, I am sick. So I apologize as I struggle through this week's Twitter Live, but I will do my best and give you guys some cool new information on the happenings of the crypto market. So to start off this week, we're actually not going to cover a token. It's going to be a stock, Coinbase. So for those of you who have been buried in a hole, Coinbase is the most well-known centralized exchange. This week, actually, they have faced some regulatory trouble. So first, and about end of last week, the SEC announced that it was charging an ex-employee for insider trading as they purchased tokens before Coinbase announced that they were going to be listed. This was actually something that was not very well telegraphed within the crypto community. Some people were tracking wallets and were able to see that somebody who clearly was an employee, who clearly had insider information, was purchasing large amounts of each of the tokens the day before. Coinbase put up a blog that said these are the assets we're considering for listing this quarter. So it appears that that person was identified internally by Coinbase. They ended up letting go of that individual. And then we don't really know the next events that transpired, but the SEC just announced that they were charging this person with insider trading. Now, the implication is that if you are charging somebody with insider trading, that would mean that the assets that they were buying were securities. As we know, there is no complete guidance from the SEC or the US government on what is and what isn't considered a security within the crypto realm. And so it is kind of this gray area. So unsurprisingly, subsequently, the SEC then announced that it was going to be investigating Coinbase and its token listings, which could be considered securities. This actually brought the Coinbase stock down, I believe, 7% on the open today, and it's down 17% on the week. I think this is a regulatory, issue that will probably drag out for a long time. But it will be one that's important to watch since it definitely dictates the health of the crypto market. All right, next we have Audius. So for those of you who are not familiar, Audius, or token audio. So Audius is a decentralized streaming music platform. It's actually pretty cool. You can go to the App Store and download it. You can listen to a lot of different artists in very high definition sound. I think I've been a member since they launched a couple of years ago now. Unfortunately, they suffered a governance attack last week. So a governance attack is separate from what would be considered like an actual hack or smart contract hack. And that usually in some of the smart contract hacks that we talk about, individuals are basically manipulating the way a smart contract works in order to steal money. In this case, the person manipulated the way that the Audius governance process worked to steal money. So basically, there was a flaw in the Audius governance contract, and it allowed the attacker to put in a proposal that said, send this address 18 million tokens. And they were able to fool the contract that they had enough tokens and were able to vote yes on the proposal, thereby transferring 18 million tokens from the Audius treasury to the hacker's wallet. At the time, these tokens were worth about $6 million, but the hacker decided to just essentially market sell these. And so they only netted by themselves about $1.1 million, but obviously it crashed the token price. This just happens if there's low liquidity, especially if you're, buying and selling it on one particular centralized DEX, where if you sell it completely, you're kind of like draining one of the automated market maker pools on a place like Uniswap. And so that was unfortunately a shame for Audius and for Audius holders. The Audius team did quickly patch this vulnerability. However, it did bring the token price down 16% week over week. All right, next up we have DYDX. So a proposal went live last week on the forum for the leading decentralized derivatives protocol, DYDX, that proposed cutting token incentive rewards by about 25% to counteract inflation. So DYDX is the leading decentralized, like I said, leading decentralized derivatives platform, and it's been mainly due to this very generous incentives program or rewards program, where they basically have been giving out the DYDX token in reward for users that trade on the platform. That if they reach a certain amount of volume, the majority of the tokens were actually given out before the token launched. Basically, they ran a whole program where people used the product more, they got more of the airdrop. And then in ongoing now, tokens are being emitted to those who use the protocol. So um, the you know so as a result, just this year, or in the last year, DYDX has seen 466 million in revenue, which is incredible. However, it's come at the cost of $378 million in token rewards. So a lot of people in the community have been very concerned that, hey, it might be time for us to transition away from this model now that we've gained users and bootstrapped the community. So the proposal is still in discussion phase, but if it passes and emissions are reduced, this should be very bullish for the DYDX token. Despite this, as I mentioned at the beginning, we've had some macro influences, and DYDX ended the week down 6.5%. All right, guys, that's all I have for you this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.